All right. So good morning, everybody, and welcome to our webinar today, Profitable Sustainability. We're here with Bob Willard today, which is very exciting. So just want to share a little bit about how and why we're here today. So it's been an interesting and a challenging year, I think, for everybody, no matter where we are. This May, we surveyed our base, the Wisconsin Sustainable Business Council base, and we learned from that survey that the biggest challenge that businesses were facing right now and in the last year or so to moving sustainability forward in their organizations was cost, profitability, and the ability to bring their leaders into the conversation and convince them that sustainability was something that they should be doing. And so with that, we're sort of using those key topics to design our conference that's coming up December 8th and 9th. So you see tracks specific to those topics in our conference. And also, we decided to reach out to our friend, Bob Willard, who we're going to be introduced to if you don't already know him here in a minute, because his tools and his toolkit really speak to this broad range of how to measure and estimate the potential cost savings and the potential opportunities in your business for sustainability. And also how to help influence others inside your organization to care about sustainability or to make it a priority. So he's going to be talking about both of those things at our upcoming conference on December 8th and 9th. But today, he's here to talk more about his workbook and work tools that can really help you address those things on both a business level and a project level in your organization. So before we sort of dive into that, I'm going to just do a little bit of housekeeping. I think we're used to Zoom calls these days, but just, typical protocol is to keep yourself muted. You do have the opportunity to unmute yourself if you want to jump in and ask a question, and we do welcome that. We want this to be participatory. Again, if you have questions, you can unmute yourself and ask, or you can use the chat function. And we will be monitoring that as we go. And so Randy, Bertram, and myself will be monitoring the chat. And so if there are questions that address specifically what Bob is speaking to, we'll ask those as we go. So again, we want this to be interactive. Please bring your questions. We will be taking a poll in a few moments just to understand if you have familiarity with those tools. But before we do that, I'm just going to share a little bit more about the Wisconsin Sustainable Business Council for those of you who might be new to us. So January 1st, 2019 was a transition for the council. We were adopted by Wisconsin Manufacturing Extension Partnership. We sort of updated our mission to read now. Whoops, excuse me. I think I hit the... So our mission is to advance sustainable principles and practices forward through the power of business. And we do this through education. We do this through tools that help you measure and improve your sustainability performance inside your business and your business outcomes. And we help sustainability practitioners and business leaders to connect to one another. So if you're not familiar with the breadth of programming that we have, here's just a little snapshot. I did just want to highlight that we are in the process of becoming a member organization. So January 1st, 2021, so right around the corner, you'll have the opportunity to become a member of the Wisconsin Sustainable Business Council to get sort of a little bit more out of your participation and hopefully improve and add value to your sustainability programs. So I'm also just going to briefly, again, mention our conference is coming up December 8th and 9th. It is virtual. The link here, connect.wsbcweb.com, is the link to the conference page. It will tell you about the different tracks that we have, the different sessions, who's speaking, and kind of all the details. We want to invite you to join us for the conference this year. And also, Bob is keynote on the second day, focusing on kind of how to help equip practitioners be better influencers in their organization. And he's also doing a pre-recorded webinar kind of talking about the business case and the benefits of sustainability. And that's really geared towards leaders in your organization. So if there's anyone in your organization still questioning that, that would be a good one to invite them to. So without further ado, I'm going to introduce you all to Bob Willard now. So Bob is the author of 6 books. He has extensive slide decks and toolkits available, all open source for you on his website, which is here at thesustainabilityadvantage.com. He serves on the board of the Future Fit Foundation and on the B Corp Standards Advisory Council. His business is a B Corp as well. He's one of 5 inaugural inductees to the ISSP, that's the International Society of Sustainability Professionals Hall of Fame in 2011, and received Clean 50 awards in 2015, and has earned 6 Best of the World overall and 5 Best of the World Community awards. So Bob is a wealth of knowledge around sustainability. His tools, again, are very useful for practitioners and businesses in general. And so he is going to be talking to us today about both kind of again, a project level tool and a business level tool. So I'm going to stop my sharing now. I'm going to turn it over to Bob. And while he gets his presentation ready, I'm going to just launch a poll asking you how familiar you are with Bob's tools. This will really help us get a sense of if you've seen them before or if they're brand new to you. So go ahead and answer, are you familiar with or have you used the Sustainability Advantage worksheets before? I'm not clear if you can see. I have 82% voted, so that's great. What the results are. Bob, can you see the results?
No, I can't.
Oh, you can't. Okay, so we have only 3% saying that yes, they've seen your tools before. We have 22% saying that only somewhat they're familiar with your tools, and 76% saying no, they're not familiar with your tools. So it sounds like the majority of folks are new to the tools.
That's helpful.
That is helpful. Okay, I see there. I can share the results. So I think those results show up in the chat area.
Yeah, I can see them on my screen too. So that's great. Thank you.
Okay, great. So I'm going to stop that and hand it over to you, Bob.
All right. And thank you for the introduction. I'm looking forward to this, and I really do encourage interaction. So if you've got questions, put them into the chat box, or if you want to activate your microphone, feel free to just break in and ask as well. So this is your session. It's a bit of a more in-depth session than the one I'm going to be doing for the conference in December. That one will talk about the business case as well, but not in quite as much detail as I'm going to be talking about it today. So this is an opportunity for us to go into as much background and context and detail as you'd like. So I'm going to be talking about 2 different business cases. The one on the left is the one that I call a company level business case. So this is taking a look at how good it would be if a company decided to simply adopt best practices that other companies are already using on sustainability kinds of things like energy and water and material and waste and the way they treat their employees and the way in which they engage with the community and so on. So if they did all of the best practices, how good would it be? We'll talk about that. The second version is if they get excited about how good it could be and they want to undertake a project that's going to lead in that direction, how does that project itself get cost justified? How do we put together a cost benefit analysis for the project as a standalone project that a CFO would be excited about and feel was appropriate? So two different levels of business case. And of course, you can use either tool. They're both free open source tools. So they're available if they're of use to you. And they really help frame the conversation with executives. So let me just give you a little context as to what's causing companies to be interested in this topic a little bit more these days than they used to be. I'm going to use a diagram which is from a report that came out in 2012 by KPMG that talked about some of the forces that used to be called externalities that are starting to become more relevant to businesses than they used to be. What you see in the bottom is a figure that I use quite often to show the interrelationship between the three dimensions of sustainability: environment, society, and the economy or businesses. And it just reinforces that society and business are wholly owned subsidiaries of the environment, and that over the years, business has been impacting both the environment and the society, sometimes positively, but unfortunately, in many cases, negatively. And some of those impacts are starting to boomerang back onto business. And what you see at the top here are some of the mega forces that are in those boomerangs. It's only 10 of them. There are others. In fact, the World Economic Forum every year puts out a global risks report that takes a look at about 30 of them. But these are some of the more important ones to take a look at, especially climate change, changes in energy and fuel availability and prices and so on, the wealth gap, food security, deforestation. So lots of things going on. And for years, most companies have deemed those things as being someone else's problem. They're externalities. On the other hand, some of these are starting to impact businesses in the way in which you see these 5 things articulated here, especially in the case of climate change, physical and weather changes. So now businesses need to think about whether or not those impacts are big enough, significant enough for them to do something that they weren't already doing about these things. So the way in which they weigh that decision is to take a look at the risks of not doing something, emerging risks, and there are 6 of them here, and the opportunities that they might be able to capitalize on if they were to do something, either to get ready for these risks or to stop contributing to them. So there's the carrots and there's the sticks. And that's the normal way that you would look at any business decision. What are the benefits? What are the opportunities that we can capture? And if we didn't do something, what are the risks associated with that? And are they big enough to cause us to do something? So risk is a huge driver, as you know, in the business community, but so are opportunities. And it's a nice combination of both here that we're trying to show. So the business case at a company level takes a look at, let's suppose a company did what other companies have already done. How could we benefit from the pioneering that other companies have done on some of the things that they've done on some of these issues and simply implement them ourselves? No new technology, no new regulations, no new techniques, just do what other companies have done. And the nice thing is that there's lots of information out there about what they've done, how they did it, and the benefits they received from doing it. So what I did in this book called The Sustainability Advantage, and then the new Sustainability Advantage, which I updated all of the assumptions and research on the 10th anniversary of that book in 2012, what it does is it takes a look at the profit impact of doing more than you're already doing on these sustainability issues. And profit's a pretty simple calculation. A profit and loss statement, or income statement as it's very often called, simply takes whatever revenue you're getting, deducts your expenses, and shows the profit. So the benefits that I took a look at on the opportunity side was, could you make more money, either because the company has a better reputation with its customers, or it's got better products or greener products, or whatever you want to call them, or it's doing some innovative services associated with the products. Or can it save some money on energy and waste of materials and water? And could it energize the employees more? And that would improve their productivity. And therefore that would contribute to the profit as well. So what I looked for were cases, a lot of them. And in fact, this was an extension of a master's that I was working on at the time in the 90s. So my master's thesis was actually the business case for sustainability. And I just kept doing that research after 2000 when I got my master's. And then I did a doctorate. So I'm kind of into this stuff. Anyway, the research shows that you can make more money and save money on energy and waste and so on. And these are the rules of thumb that I ended up with, taking a look at the spectrum of possibilities and always taking the lower end of the spectrum. So these are conservative estimates that you can make at least these kinds of improvements in each of those areas. And if you were to do that, the profit could go up by 51 to 81% for the normal typical company. And the reason that there's a range is because I took a look at a small consulting type company and a larger manufacturing type company, which are sort of the two ends of the spectrum, and ran the numbers for typical companies in each of those categories. And the smaller consulting type company or services type company was 51%. There's more opportunity in the manufacturing sector because they're doing more spending on energy, waste, materials, et cetera. So a little bit more opportunity. So just to make sure you understand how to read those numbers, if you're making a profit today of, let's say, 10%, then if you did all of these best practices, you would end up with a profit of 15 to 18%. So it's a percent of your percent profit improvement. So, and that's even allowing for the fact that I factored it down even more by taking half of the savings from waste and half of the savings from materials and putting them into a rotating pool of capital to fund new projects that would be associated with all of this as well. So I creamed off half of the savings from those two areas. Why not other areas? Because I just chose to. You could do that if you want, or you don't have to do that. But what I'm saying is that this 51 to 81% is allowing for the fact that half of the savings from those two areas has already been taken somewhere else and doesn't flow through to the bottom line. So that's the overall picture of what might be possible based on the experience of other companies. Now, this is not a neutral decision. And to help reinforce that, I tried to size what the risk was to the company on the revenue side, on the expense side, of not doing something. So if a company said, well, not right now, thanks, we're kind of busy with this other stuff and we'll get back to this, but not right now. They need to understand that actually they could be jeopardizing their profit. There could be some risks to revenue if their competitors undertake some of these things and they don't, and become more attractive to customers that you currently have and might drift off to your competitors. Or the expenses could also be negatively impacted because some of these are going to go up. And if you don't take steps to reduce them, then you could be hit with higher expenses. So basically your profit could be exposed by 16 to 36%. So that's the overall business case. And that's kind of the based on conservative assumptions associated with doing best practices that other companies have already done. And by the way, there's not a mystery what those practices are. It's amazing how companies are open to what they do, how they did it, and how much money they saved. It's quite amazing. It's wonderful. So this is not rocket science. How to do this stuff is pretty well known. So that's a PowerPoint version of it. There is an opportunity for you to play with the numbers and say, well, it's 9% may be okay for some companies in revenue growth, but in our case, I don't think it's going to be like that. So you can change the numbers. And there are two vehicles that allow you to play with this, to frame the discussion. One was what I call a dashboard, and another one is called the workbook or the worksheets. It's an Excel worksheet. So let's take a look at the dashboard first of all. This is a tool that's available to you. There's a demo of it at the link at the bottom of this slide. And you can also go to the tool itself. It's a free open source dashboard. You can play with it any way you want. You can use sample companies. There are 4 sample companies, all ranging from a small services company to a large manufacturing company and a couple in between, or you can plug in your own numbers. And as you can see, what it's asking you for, just let me enlarge this a bit, It's asking you for what the revenue, energy, material expenses, salary, profit, average salary, and number of employees are. So some pretty basic information on those 7 things. And if you're not sure what they are, there's some guidance in the information associated with those things that give you a little bit of guidance on what they might be. But if you don't know what they are and you just want to play with the tool to get a sense of how it works, choose one of the sample companies from the drop-down menu there, and you'll be able to see that. So once you do that, you go to step 2, and then this is the jazzy part. This is so cool. This is a very interactive kind of dashboard where you can hit the drop-down menu and it explodes what the factors are underneath that you might play with. In the case of revenue, the 3 different ways in which you can improve the amount of revenue associated, and the way in which that 9% is made up of 5, 2, and 2 from each of those other sources. And if you think 5% is too generous, you can just move the slider. And when you move the slider, magic happens. This number changes, that number changes. The bar at the top that shows the proportion that's coming from, in this case, revenue, that changes. This percent profit changes. This number over here changes. And these numbers down here change. So it's kind of kind of jazzy. And you can play with it and zoom in and out or move the bar any way you want for each of those different areas. So it's a way to have a conversation. It's a way to frame the conversation. It's not magic, and it's got a whole lot of assumptions baked into it, and it uses language that may not be appropriate for some sectors versus other sectors. But this is sort of a 5-minute business case opportunity to just say, what if, and run some numbers. But if you want to get into it and you really want to change some of the assumptions a little bit more and change the language and put in things that aren't there and take out things that you don't think are appropriate, then it's more appropriate to use the Excel workbook, which uses all the same logic, but you've got a chance to be able to play with it more. So the Sustainability Advantage worksheet is a Excel workbook, basically laid out the same way. You put in the company's data profile on those same 7 things. You can use a sample profile from over here if you want, small services or large manufacturing company. So is the basic first step is to decide what company information you want to use for the rest of the exercise. And then what you do is you play with the numbers, and all of these little red triangles, if you're familiar with Excel, give you information and guidance on what you might want this estimate to be and what the cases are that are behind the original estimate of 5% rather. And you do the same with risks. So it's an Excel spreadsheet. You can change anything you want, but it gives you a good starter set of what you might want to do. And then at the bottom of it, there's a summary of all of the information that you put in. And these are the amounts that are a result of whatever you did. In this particular case, this is the 81% for a large company. Profit increase percent of that. The original profit of the company was 7%. So the profit increase is 81% over that. And this is the capital reserve. You don't have to do that. You can take that out of the Excel spreadsheet. Plus there's the opportunity to see it graphically. And you can also see what the risks are associated with all of this. And that gives you a chance to play with those numbers as well. So there are 2 vehicles by which you can play with the possibilities and take a look at what might be on the horizon for the organization if it were to simply do what other companies have already done. And as you have these conversations, you may find that the executives that you're having these chats with zero in on one or more of these line items, and they say, well, I don't like the assumptions here, and I don't think that applies to us. So you change them. You change them. Or you may find that their energy about doing something on some of these is enough to warrant a project that might actually focus on that particular aspect, in which case you get into a project level business case to justify that project, which I'll come to next. But before we do that, are there any questions about this? Because what it does is it gives you a chance to look at the opportunity to improve the profit of the company if it were to adopt a bunch of best practices related to sustainability, environmental and social kinds of things. And what it does is it puts some numbers around that. And that's kind of helpful for executives because rightly or wrongly, they're kind of numbers driven.
So Bob, there was one question, and this might be addressed more on the project level, or perhaps you can speak to it on both levels, but it's around the opportunity costs of changing to more environmentally friendly packaging. If you have any
Yes.
experience with that, if you could speak to that.
Yes. So you could zero in on that, but I think you're right. It would probably make more sense to use this next tool to zero in on the potential opportunity associated with better packaging. Because it may cost you something to be able to convert to more appropriate packaging for whatever goods you're making available. But on the other hand, it may attract some business, some customers that aren't currently using those products. So to be able to take a look at those trade-offs, that sounds like a project kind of focus. And I'm about to get into that. Are there any other questions?
Hi, I have a question for you. As I look at the data that you have in the dashboard and in the worksheet, that you're using to calculate some of these percentages, I noticed that, a lot of it is very heavily focused on physical, energy, water, waste packaging. And I'm wondering if you've seen, or if you can speak to any examples of companies that are using this model where they're focused less on the environment and more on people, social impact, and what other kinds of data points they would be including in this model.
Yeah, you really want to zero in on this employee productivity, innovation, and attrition costs. Because if you're in a more services kind of business, people are really, really important to your business. And the level of engagement of those people and the agreement of your human resources folks that some of these estimates are appropriate for your company become really, really important. So it's fine for us to say that this is going to happen. But if they're not keeping track of productivity these days in the first place, or not keeping track of the attrition, when good people leave, the cost of replacing them and getting them up to speed of this at the same level of competence of the people that left, that's huge. So if they're already taking those things into consideration, then this may be a helpful vehicle for sizing all of that. And by the way, I've got a spreadsheet associated with the next tool that goes into excruciating detail about all of the cost elements associated with hiring, training, and replacing a good employee. I used to be in HR in IBM Canada. I spent 34 years in IBM. And one of our biggest concerns as a company was losing good people in whom we'd invested a ton of training. So we knew what the norms were for our sector. The norm was about 19% turnover every year at that time in Canada in the IT sector. If we got above 12, we went into panic mode to find out what the heck we were doing wrong, that good people were leaving the company. So the attrition cost is huge, huge. And a big deal if you're not in the manufacturing sector, but you're more dependent on energized, competent, good people in whom you've invested a significant amount of training. So that part of the business case will be much, much more important. Frankly, that is the biggest one. It's the secret sauce for capturing all of the others. But the reality is that a lot of human resources folks don't don't account for that as appropriately as they might.
And I'm just going to share that in our 21st Century Pathways program last year and going forward, there's a whole kind of module on that where we help companies sort of walk through the calculating what that true cost to turnover and attrition is in their organization, because there's a lot of factors that go into play in that. So that's an area we can help if at all needed. Bob, there's another question around just the size of the company and if these tools apply to small manufacturers or small businesses as well as large companies.
Yeah, I think they do. Of course, you're going to have to tune things appropriately, but the intent was to cover the whole spectrum of small and medium-sized enterprises as well as large companies. So the 51% that you see on this slide, when I say small services company, I chose a 6-person consulting company as the mock-up company that I was running the numbers for. So it's small. What I'm trying to show is that this is appropriate for any size company. There's a company in Ontario called Veriform. It's a manufacturing company where the CEO of the organization decided just to focus on energy. He wanted to reduce his carbon footprint. He just had his first daughter and was concerned about her future, and wanted to reduce his greenhouse gases. So he focused on energy, especially natural gas. And he undertook 42 projects in 3 years, and his profits went up by 76% just by focusing on energy. Bottom line profits just by focusing on energy. And he didn't quit. He's still working on this. Actually, he's up to over 100 projects. He saved over $2 million. And just to reinforce the point we were making before about employees, $1 million of that is strictly on energy costs, but another $500,000 of that is coming from the fact that he has zero turnover. His employees are so excited about working for a company that cares about the same things they do, that they're not leaving. And that's saving him a ton compared to his competitors and compared to what he was doing before. So there's a $500,000 of savings there. And there's another half on maintenance, which was not directly associated with energy. So you once you start keeping track of this stuff, there's a lot of potential. The catalyst to the discussion about those possibilities is what this tool is intended to do. And if someone says, yeah, but where did you get these numbers from? Like, what was that company that saved this 75% on energy costs? Were they in Europe or were they in North America? Or when was that? How long ago was that? And what base were they using? And by the time you're finished all that discussion, what they're really asking for is, what is it for us today now? And that's what this prompts, that you can see what the starting assumptions are, but of course you're going to change all of those assumptions to suit the company. And if it's not worth them doing something, don't do it. And if it is, terrific. But if they don't see the possibilities and they can't see doing it for any other reason, like purpose-driven reasons and so on, then at least now this isn't going to fly. They're not going to support it. But if they want to do this, believe me, they will make sure these numbers work.
I don't have any other questions that came in through the chat at this point, Bob.
Okay, so let me just level set what we've just done here. Theoretically, we have created an appetite for doing something or a bunch of things that the company has not already done. The book that you see up in the upper right-hand corner, which is really a book, it's a printed book, which you can still get electronically. It's out of print in hard copy, but all of the text, all of the assumptions, all of the cases for that that are listed in that book, I have copied and pasted into the comment boxes associated with the spreadsheet. So actually, you don't need to buy the book. The book is basically in the spreadsheet. In fact, I wrote the spreadsheet first and then wrote the book to describe the spreadsheet. So, and it's a free open source spreadsheet, so you can use that. That's the workbook. The dashboard you've seen, there's a video, a little 5-minute video that you can watch on YouTube, which shows how the dashboard works, and a video about the workbook, and then the book itself. So anyway, I'm trying to help you understand that there are tools there that may be useful to you. So let's suppose that the company gets all excited about this pot of gold at the end of the rainbow, the company level business case based on best practices. There's a pretty good chance they're not going to do it all in one chunk. They're going to do project A, project B, project C, one at a time. Maybe one on waste, maybe one on energy, maybe one on something else, employee benefits or something of that nature. In any event, they're going to do it one project at a time. And as you know, in business, rightly or wrongly, if each of those projects on its own needs to be cost justified. Even though they're leading towards this big pot of gold, each needs to have a business case associated with it. And that's what the second tool is all about, is a project level business case, sustainability ROI workbook. And let me just reinforce that this is not a book. It's a workbook. I've created this cover for it, but basically it's an Excel workbook. With multiple worksheets in the workbook and a bunch of help videos that are associated with how to use each of the worksheets. So let me give you a sense of what that's all about. Any other questions before I move on to this? All right. So, and by the way, this feel free to interrupt as we go along, and don't be shy about asking questions. All right, so let me just reinforce that there are a pretty comprehensive list of benefits that are possible as you get into this realm of sustainability. First of all, there are the softer ones, which is it may help the company fulfill its purpose. And purpose is getting a lot of press these days. The idea of a multi-stakeholder purpose. In other words, you're trying to improve the well-being of multiple stakeholders, not just your shareholders, and contribute perhaps to the Sustainable Development Goals, the SDGs, which some companies are using as a framework for their initiatives, and improve your social license to operate, your goodwill, your reputation in the marketplace. And as you do that, you can start to capitalize on some of these more monetizable kinds of benefits. So the improvement in your reputation may generate some revenue. Lots of opportunities for savings. Lots of opportunities to engage your employees, which leads to some savings on hiring and attrition and increased productivity. Access to capital. There's a sustainable finance or green finance movement to make money available to projects that are aligned with some of these topics. Increased asset values as you retrofit your buildings to make them green buildings or use electric vehicles rather than internal combustion vehicles. The asset values and the retention of that value may be higher than previously. And there's no evidence at all that you're going to suffer on the stock market if you're a publicly traded company. In fact, it looks like it's exactly the opposite. As you undertake these kinds of things, it looks like companies outperform others that don't. And then there's the flip side of all of those things, to avoid the risks of inaction, which is the opposite of all of the things that you saw up above. So that's the Kluge benefits. And you would think that companies would be all over this stuff. I mean, goodness, that's a pretty impressive list. And what I've done is I've culled those from about 20 different business cases for sustainability, some that emphasize some of those more than others, but that's sort of the master list of potential benefits that any project might be able to tap into. A particular project probably won't hit all of them, but it's a sort of a master list from which you can select the ones that are appropriate for the kind of project that you're into. But from the point of view of the folks in the company that control the money, the folks in finance, these are just words. They're impressive words, but they're just words. So if you wonder why CFOs, chief financial officers, or the finance folks aren't as excited as you may be about these things, this may give you a couple of hints. There was a survey done a little while ago about barriers to CFO support for sustainability-related initiatives. This looks like a more complicated bar chart than it deserves to be, but basically what they're showing are the most significant barriers through to the least significant barriers. So let's just deal with the dark blue ones, which are the most significant barriers. So the first one is the investment fails to pay back within 2 years. So that's a bit of a showstopper for a lot of folks in the sustainability world, because just the notion of payback may be a little foreign to them. But rightly or wrongly, companies look for what the payback period is for a particular project. And the rule of thumb for many projects is 2 years or less. In other words, the amount of money that you invest in the project needs to be returned from the benefits, the positive cash flows associated with that project within the next 2 years. That's what payback period is all about. The second is that the business case benefits are not properly quantified. So we need a tool that helps do that. The benefits are too small compared to other potential internal projects, not external. So you are competing for money with other projects inside the company. So even if you think your project is fantastic, and even if it's got a good payback period, if it's not as good as other projects, then it won't get the limited amount of money that may be available, because companies never have enough to be able to do everything that they'd like to do. They've got a limited amount of capital. So they need to be careful about investing that capital in projects which are going to be the best for the company. So you are competing, rightly or wrongly, with other projects inside the company. And then the last one is lack of buy-in from the executive committee. And of course, they're not going to be bought in if some of these other things aren't there either. So basically what we need to do is be more adept at quantifying these things in a way that makes sense to a CFO. So just to reinforce that, let me just tell you a little experience that I had a few years ago. I was in Seattle doing a bunch of talks one week, and I had occasion to have a meeting with a chief financial officer of an organization that had a green team. And the green team in this company had gone forward to their chief financial officer with 2 or 3 projects, and pretty well have been dismissed out of hand by the CFO. Just, no, not interested. So they were kind of discouraged, and some of the folks in Seattle that were working with these folks asked me if I would spend a half day with the CFO and help the guy see the light on how terrific this could be for the organization. So I said, sure. One thing happened after another, and by the time the meeting actually happened, other things had come up on the CFO's agenda, and basically a half day turned into a coffee meeting. So I found that out as I was arriving, that the CFO was only going to be able to have coffee with me. And I'm thinking, goodness me, how big's the magic wand I'm supposed to hit this guy with? Anyway, we introduced each other, and I said, so you're the CFO, and your job is to make sure the company doesn't do anything stupid with its money. And he said, well, I don't know if I'd express it quite that way, but we do have to be careful about how we use the limited amount of capital that we've got and make sure that we're using it appropriately. I said, absolutely. And that's what your job is, and that's what it should be. So I said, I've also heard that you're not that excited about sustainability stuff. He said, well, I guess I just don't understand it, but I don't quite see how this is going to be a good thing for our company. So the green team is there with me, and we're in this room with the CFO, and there's me and just us. So I said to the CFO, so when you do make decisions on which projects you're going to support, how do you do that? He said, well, it's pretty straightforward. I take a look at their CapEx form and find out what the estimates were that they had for costs and benefits associated with this project, and the one with the best payback period wins. And I said, what form? He said, our CapEx form, the capital expenditure request form. It's the form that we use when anybody is looking for capital to be expended, it's capital expenditure by the company. It's CapEx form. So I turned to I turned to the green team and I said, have you ever heard of that form? And they hadn't. So I said to the CFO, would you mind giving us a copy of the form so we could see what it looks like, and maybe take one of our projects that the green team has got in mind and fill in the form for that project? He said, oh, I'd be happy to. So we went off to his office, got the form, brought it back. He said, sorry, I really do have to leave, but I'll come back at noon and see how it's going. And I only had a morning as well. So I worked with the green team, and we took one of their projects, the one that they thought was the best one, converted all of their information into the format of the form. The CFO came back at noon, gave us some great ideas actually on how to do a little bit more than had already been done. I had to leave, he had to leave. Anyway, the green team finished later that afternoon filling in the form and went to the CFO, and he approved the project. Same project that he had refused. So the moral of this story is, for those of us that are trying to engage with executives to make a decision, it helps if we know how they make decisions and the format by which they expect the proposal to be presented to them, so that it looks like a normal proposal, not an exception, and that we can express the benefits of that in terms that they are comfortable with looking at. So the kind of form that this guy was talking about, a capital expenditure request form, is normal. This is the way decisions are made in companies. They may not call it exactly that, but it's basically a cost-benefit analysis form. And the way in which it works is pretty straightforward. It's basically this. So I'm calling it a 20th century CapEx request form because I'm about to contrast that with something which is more appropriate in this century than the last century. But this has been used for years and years and years by companies. And basically, regardless of what it's called, this is the kind of information that's on it. The project is described and who it is that's proposing it. Any expense savings associated with the project or projected increased revenue as a result of the project are quantified. The risks of doing the project and of not doing the project are as quantified as possible. How much money you need and where you think you might be able to get that money from, because in some cases you may have to go outside the company to be able to get the money. And then you end up with these calculations, the payback period that we talked about before, the internal rate of return on the investment, and the net present value of the cash flows over whatever period of evaluation you're looking at. Most folks in the sustainability arena just seize up when they see these things. They have no idea what the heck they mean or how to calculate them. And the good news is that the tool I'm about to describe to you does all of those calculations for you automatically. You fill in the rest of the stuff, these are automatically calculated for you. But you should be familiar with at least the acronyms. And by the way, if you want to understand the formulas and the detail behind them, there's an appendix to the workbook that goes through excruciating detail how the calculations are actually done. And it's actually good to have that, because you may want to compare it with the way in which your finance folks normally do those calculations, just to make sure that the formulas are the same. And if they're different, use theirs. So this is just a sort of a draft worksheet. So this form has been used for a long time, and it's worked really, really well. But there are a bunch of folks that are called the CFO, Chief Financial Officer, Leadership Network, associated with a group called Accounting for Sustainability over in the UK. that took a look at this form and they said, you know what, we need to kind of embellish this. So they put out a report. They called it the CapEx report or paper. And basically what they said is our financial models, like this CapEx form, may have brought us success in the past, and we shouldn't abandon them now. But we should think about how new information can better inform our capital investment decisions. So don't throw out the old form, but add new information to it. So basically what I did was I took their advice and created an Excel workbook that conforms to what they suggested. So the old form and the advice of the CFO Leadership Network, and we ended up with something which includes this new information. So what you can see at the bottom is the code for the plus signs. The plus signs are the information that's added to what the traditional content might be. So for example, in the project description, you may want to include how this particular project is going to help the company fulfill its purpose, its multi-stakeholder purpose, or its vision, or its mission, or its values, and how it conforms to their long-term strategic plans, and how it helps improve their performance on environmental and social metrics or goals or targets that they may have set for themselves, and improve their impacts in those areas. So that's all a legitimate part of embellishing, enhancing the description of the so what of this project. And then you get into the other stuff, not only the expenses that are going to be directly saved or the revenue that might be directly improved, but indirect as well. And the impact on assets, the monetized risks of doing or even not doing the project, new sources of capital that you might be able to tap into, and then the calculations. And as I mentioned, a lot of the calculations are done, in fact, many of the calculations are done for you by the magic of Excel. So the Excel workbook has a worksheet that looks very much like this, and then a bunch of backup worksheets, one for each of these different areas where the detailed calculations are done, and then Excel just transcribes all of those results into this master one. So by the time you're finished all of those sheets, this is complete, these calculations are done for you, and you've got something you can go forward to the CFO with. If they've already got a form, use their form. This is just a scratch pad, but basically the elements are going to be the same. So it's a way to honor the decision-making process that they are comfortable with. You don't want to in any way imply that they're making decisions the wrong way. You want to build on the base of smart decisions that they have been making for years and show how in these days, the 21st century, there are some things that may be more important than they used to be and should be included as part of the decision useful information that they're making their judgments around. So that's what the Sustainability ROI Workbook is all about. It also includes something which may be also of interest to folks in the C-suite, not only the CFO, but others. And I'm calling it a project appraisal tool. So let's suppose project A, project B, project C come forward with their version of all of this stuff filled out. What you might want to encourage the decision makers to do is to assign a weight to each of these areas. Is it 100% on the payback period, internal rate of return, net present value kind of stuff? Or maybe it's 70%. And maybe there's a 10% weight for how powerful this is, the purpose stuff, or alignment with purpose, or goals, or helping the company achieve goals that it set for itself on the environmental and social side. Or maybe just the fact that you're going to save money or increase the revenue of the organization is worth something on its own. And maybe avoiding risks or actually making sure that the risks associated with the project are really low by using best practices of other companies, that could be worth something as well. So maybe it's 10, 10, 10, and 70, or maybe it's 50 here, and maybe it's 30 here, and maybe 10, but we don't decide that. You don't decide that, I don't decide that, they decide that. The CFO, the decision maker, makes that decision. And you may not agree with it, but swallow hard and just agree with it initially. Because what you're doing is you're planting seeds for the fact that you have a multi-criteria decision that's about to be made. And in fact, I didn't make up this idea. It's the CFO Leadership Network that made this idea. It's even got a name. It's called Multi-Criteria Decision, WCD, MCD. And what it does is it allows the weights of these things to be married with the scores of each of the projects in these particular areas. So how well does project A, B, and C do on each of these areas? So you score them on a scale of 1 to 5, 1 to 10, doesn't matter. You come up with a weighted score, and the one with the best total weighted score wins. But so it's a way of building on the decision-making approach that's been used in the past and sort of putting a little more structure around it that might be helpful. Plus, it gives you a chance to have this stuff up here matter. This is very hard to put a number on, but these surrogate numbers like weight and score are numbers, even though these are not monetizable things. So the importance of them gets weighted and quantified, and that helps. So this allows the do it anyway kind of decision to be made by a company. And I use that expression because some of you may be familiar with Interface Carpet, Ray Anderson, sort of an icon of pioneers in the corporate world around sustainability. Amazing, amazing company, an amazing story, an amazing man. And he wrote a book called Mid-Course Correction, I think it was. And in it, there's a little description of him having a conversation with a factory operator, one of their factories. He was trying to get all renewable energy being used by all of the factories that Interface had around the world. But he wanted to make darn sure that this was cost justified. So every factory had to cost justify this conversion to renewable energy. And many of them were able to do that, but there were a couple that just could not make the numbers work. And then he went to them and said, "Are you sure? You've done the numbers?" And he took a look at the numbers and he said, "Yeah, you're right. Do it anyway." Because this aligned with the purpose of the company. And that weight overrode the lack of financial justification for it. It was just the right thing to do it anyway. So this gives a little legitimization to that dimension of making decisions and shows it as a structured decision-making process. So I'm going to go into some of the prerequisites of doing this, but any questions about what I just went through there? How it works? You can download the tool as many times as you want from my website. You can take it, you can make it your own, you can brand it as yours. I don't care. It's a way in which you can have a more useful conversation with decision makers, honoring the way in which they normally make decisions, and providing them with information in a format that is more comfortable to the way in which they would expect it to be.
Hey, Bob.
Yes.
This is Tom. Could you give an example of, under risks, the monetized risks of not doing the project? How would you put a number on that?
Yeah, it's a challenge, but it's basically the way in which you would monetize any risk. And there are some companies that have more formalized enterprise risk management processes, ERM processes, where they take a look at normal risks. And the two ways in which, or the two dimensions of risk that you look at, is how bad would it be if this risk were to happen, the impact. And the second dimension is the probability of it happening within the evaluation period. So the impact can be expressed very often as a monetized number, which is factored down by the probability of that happening. So for example, if you said, if we didn't do this, we could lose some revenue. Say, oh yeah, how much? Like, what's the worst case? Well, what's the worst case of how much we might lose? So that's where you get into monetizing the risk, the overall impact. And then the probability, the percent probability of that happening is applied to that, but you end up with a monetized risk. And that's the
Okay.
logic that's used both in this spreadsheet as well as in the previous one that we talked about, the company level business case.
All right, that's clear. Thank you.
Any other questions? So it's a tool, right? It's more of a conversation starter, where you can take a look at the various components of this and have conversations with folks. So let me just build on that a little bit. Let's suppose, for example, you were looking at something to do with waste, or you were looking at something to do with changing your packaging so that it's not going to be plastic packaging, or you're going to have products which are not single-use products, they're going to be multiple use or reusable kinds of things. So you wanted to try this tool. So what do you need to be able to use this tool? Well, you need to have a little bit of knowledge of sustainability. That helps. You need to have some comfort with Excel. And if you're not comfortable with Excel, find somebody who is, especially if they're in finance, because if you get them to help you with Excel, then it's another excuse to connect with them and start talking their language and using their forms. You need to have an initiative, a particular initiative in mind. This is not for the general what if kind of thing. This is a specific project that you would like the company to undertake. So a specific one, what it is, and the cost of it. It's really important that you do your homework and try to figure out what's it going to cost for the company to do what I'm hoping that they're going to do. If I was in charge of the company, would I do it? So figure out what the costs are. And that's where your credibility comes from. Make sure that's for a specific organization, the company, a specific company with a specific project, and then you get into all of the data and assumptions. And you need some baseline data, the company's current revenue and expenses and so on and all that kind of stuff, as well as, where you're going to get that information if you don't already have it, potential sources and co-creators. So at some point, you're going to have to make some estimates of how good it could be, how these benefits are going to be captured. So where the heck do you get the right estimates? And the first point is you get them from the people that know what this is all about. So talk to the data owners. If you're talking about something that's going to help operations, talk to the operations manager. Finance has a lot of data, so does strategies. If you've got a research and development department, they may have a lot of the information, but you need to be able to get approval from them to use the data. And many of these folks are not exactly open with sharing information, even with other people inside the company, none of your business. So what you need to have is a little bit of a door opener and get agreement from the CFO or the CEO or somebody with a C in front of their title that you're going to take a look at this and see whether or not this might be worth doing. So you kind of go into it saying, well, I'm not sure, but why don't we take a look at the numbers and see if it makes sense? And if it makes sense, let's do it. If it doesn't, let's not. So you can say that I've talked to somebody else and they're kind of wondering if it's time for us to take a look at this. Maybe we looked at it before, but maybe things have changed now. And so the CEO and I were wondering if, and all of a sudden the door opens and they share their information with you. Plus, you can say, and by the way, it looks like there are some companies that are getting this percent improvement. Do you think we might be able to get that as well? So you start to get them into the estimations as well. Or you can extrapolate from company experience with similar kinds of projects, similar trends, or outside your company but they're in your sector, or other business organization members that you're a part of, or just do some research, papers, reports, news items, conference sessions, all that kind of stuff. Or there's a ton of guidance baked into the worksheets themselves and the comment boxes, as I mentioned before. You can use that as well. But if you can get better information from somewhere else, use it. It's just sort of general information to get you started. Or come up with a swag opportunity. So you say, I don't know what the improvement is. It's going to be more than 0, but I'm not sure what it's going to be. So we use 2% or 3% or 4% or whatever it is. But protect your credibility. Protect your credibility. And if what you think is possible, nobody else thinks is possible, use their estimates. You don't need all of these benefits to be able to have a good case, but you want to be conservative and protect your credibility, because that is your most important asset. Don't jeopardize that, because you'll be back. And you want to have a relationship with these folks that they trust you, and that you're not trying to convince the company to do something that's going to help the company do worse. You want to help the company do better. So you probably have to remind them about every 3 sentences that that's the case. Anyway, what you want to do is to make sure that you honor this, and this is probably the most important slide of all. The art of the business case process is more important than the accuracy of the numbers in the spreadsheet. The intent of this is to get a consensus of what might be possible and to get others as excited about this as you are. Because if you have this idea hatched somewhere in a closet and you put together the numbers and you go tearing into the CFO, and the CFO says, fantastic, let's do it. And you go back to the others that are actually going to have to do it, and they say, where the heck did you get those numbers from? And how come you're the one that went forward with that? If you tick off a whole lot of people in the process of getting this approval and making it look like you're the hero rather than them, they will find very good reasons, subtle, unstated, but very good reasons why, goodness, this project just never happens, or it doesn't happen in a way that gives the benefits that you said it would. So the art of the process is co-creating this business case with others whose support you need, both in terms of the assumptions that are in it. Because if you go to the CFO and they say, oh, that's a good assumption, did you check with HR on this improved productivity that might be possible? And you say, well, no, that's not good. You want to have checked all your numbers with the people who are closest to those areas. And in fact, maybe you have them not only co-create and co-own it, maybe you have them present it as their project, so they get the limelight, not you. Really, really important that they be as excited about this as you are, and that they want it to work as much as you do, so that it does have a chance of actually delivering the goods that you said it would. So engage the data owners, the implementers, and avoid the bruised egos. That'll kill you. Regardless of how fantastic this project could be for the company, if you're the only one that thinks that way and you've ticked off a lot of other good people in the process of putting together your case, not cool. So this is it's a tool. It's a free open source Excel workbook. It comes with a sample project example, lots of built-in guidance, help videos on every one of the worksheets that takes you through. It's actually a green building retrofit example. Appendices that explain how all of those calculations, the payback period, IRR, net present value, are all done. A detailed HR benefits calculator, a suggested way in which you might frame your proposal, the order, the outline of a proposal or a presentation, and where to get the information from. And the fact is, it's not it's not Bob Willard's brainstorm. This is all based on the CFO Leadership Network's ideas as to how to do structured decision making in the 21st century. So it's a free open source workbook from there. Questions? You can key them in, or you can just activate your microphone.
There's not a question here, Bob, but just a comment from Stuart that he thinks that these tools are going to be really useful and that he's been needing them. So he's excited to try them out, I think.
That's great. And you should treat them like your own. That's the intent. When I say open source, that's the intent. What that means is, if you take a look at all of the rows that include potential benefits, which map that list of benefits that I showed earlier, and you say, well, this one doesn't matter. That's totally irrelevant to this particular project. You can either delete the row or just leave it 0. So it's a series of prompts as to whether or not there might be something here that's worth keeping track of. Like if your insurance rates might be affected by it, or your access to capital might be affected by it, or the way in which your position in the community might be affected by it, or a whole bunch of soft things and hard things and so on. It's just a sort of a master list that you can then tailor for your particular situation and use as a starter set for conversations with folks that have probably their own version of it. And if they do use their version, this is just a scratch pad for stuff that would go into their version.
Bob, Jack Wilson, you've done a tremendous job of presenting a very, very valuable tool. Thank you so much. I think with 77% of us not having past experience, I can see how the specific projects could work very, very well in a lot of cases. And for this to be open to everyone in the public to use, thanks again on behalf of society for what you've done here.
Oh, goodness, thank you. That's very kind of you. Actually, it's kind of selfish that I'm making it available for free, because I'm very uneasy that we're not making as much progress as we need to on a number of these issues. Some of these issues are not waiting for us. And I've got kids, I've got grandkids, and we really do need to get our act together and use business leadership to help us address some of these issues. And the contribution that business can make to some of those solutions is very often inhibited by the fact that the people in charge don't think it's a good thing for the company.
Bob, if you think that's a selfish motive, I think we all better have that selfish motive.
So we need to pick up the pace, and this may help us do that. And as change agents, our credibility and our confidence is really, really important. And these tools are designed to enhance both. Confidence that we're using a decision-making approach or a structure to our proposal that is appropriate for any proposal going up to the more senior folks. And secondly, the competence that you bring to it is that you know what you're talking about. You know what you're talking about. You know that these kinds of projects are going to cost this and take this long and that kind of thing. You've done your homework. And this gives you a much better chance of being viewed as a valued business partner in the organization that you're dealing with. You're not some wild-eyed tree hugger. You're a valued business partner.
That's great. There was also another comment from Carol in here, just saying that, she often works with companies that have just a few team members that are really, interested in making the company more sustainable, but that these tools can definitely help when, the CFO or the president are the ones that are the skeptics, like you said, sort of using their language. And she also said that she appreciated the suggestions about navigating when using with teams.
Yeah, very, very important. I remember in IBM, I was in several different roles, and I remember high flyers, high management potential folks getting parachuted into the department. They come up with a brilliant idea, and they go charging up to senior management, get approval for it, and then wonder why the rest of us weren't as excited as they were. And for whatever reason, their bright idea just never happened, because they had pretty well shattered their relationship with the rest of us that were going to be around after they left and moved on to their next role. So the dynamics, the internal politics and so on, man, that'll kill you faster than a bad set of numbers.
Exactly. Yes, somebody asked if we'll share the recording, and I just want to reiterate that we have been recording this, and we will share it out to all of those who were registered, along with the PDF of Bob's slides. So we'll share that with you following once the recording is ready. And with that, I'll probably include just the direct links that he has in the slides, as well as the information on how you can contact the Wisconsin Sustainable Business Council if you have, any particular questions or needs that we can support you with.
So just to kind of wrap up, there are a lot of tools that I've got that may be of use to you. I've talked about two of them today, company level business case and the project level business case. Those are the two. In case you're wondering what I do, I don't do as much consulting the way you would think of consulting. I work on big projects with organizations, but it's not typical consulting. I do a lot of talks. I'll probably do a little over 70 talks this year, like this, from home, webinar type things. Actually, I stopped flying about 3 years ago, just out of concern about my own carbon footprint, and bought an electric car. And I think I'm going to get my carbon footprint down to 0 this year without offsets. From 27 tons, which it was a few years ago. So it's kind of fun to try to walk the talk on this stuff. So I'm doing a lot of talks, colleges, universities, groups like you folks. We talked about those two tools. There's also another free open source tool on how to do sustainable procurement. If your company's into that, I encourage you to take a look at that. Something called a 3-in-1 sustainability assessment toolkit that helps you assess how you're doing, your impacts on the environment and society. On the core sustainability issues, and how to assess where you are on your journey towards trying to do at least no harm and maybe doing some good on those things. And it's intended for small and medium-sized enterprises, so it doesn't have hundreds of questions. Its design point is less than 50. And right now it's 36 questions, I guess. So it gives you a chance of summarizing where you are on these things and deciding whether you want to do some more on some of the issues than you're already doing. So it's an assessment that leads to action, hopefully, but designed for small and medium-sized enterprises. There are lots of good ones out there. The B Corp stuff is fantastic. The Future Fit Business Benchmark stuff is fantastic, but hundreds of questions. This one I've distilled down to something that's more appropriate for small and medium-sized enterprises that might have trouble spelling sustainability. But if somebody important asks them, like an investor or a banker, how are you doing on this stuff? This gives them a fighting chance of answering that question. A couple of more books, Future Fit Business Benchmark that I just mentioned. That's the only science-based benchmark for what a company needs to do in order for it to be a truly sustainable enterprise. 7 bold strokes to save our world. And the set of master slides, it's almost free, but it's $39 a year to subscribe to my master set of slides, which is a useful tool for educational purposes, as well as for saving you having to recreate them. So a lot of this stuff is free and open source intentionally, so we can pick up the pace of what we're all working on, and maybe of use or interest to you as well. So this is just the tip of the iceberg. And if at some point you want to hear more about some of those other things, I'd be happy to do another webinar on those.
Great, thank you so much, Bob. This is great to hear that these tools are going to be put into practice in our Wisconsin sustainable business community. I really appreciate you taking the time to be with us today and for your availability and talks. We're going to hear from you at our conference in December. So I did put a survey link in the chat. I will also put that in the email that goes out to you. If you are interested in other topics that you want to learn more about to help advance sustainability in your organization, please let us know. That's sort of what we want, is to provide you with the education and tools that you need most support on growing so that you can grow sustainability in your organization. So let us know what you need. It looks like there's some positive thoughts there in the chat. I hope everybody had the opportunity or will vote today. It is election day in America. So hopefully you all voted. And again, thanks so much, Bob, for being here.
Okay, it's a pleasure, and it's great that you've got local folks that can help you with these tools. Jesse and her colleagues are well equipped to help do that, and I'm back up if they need my help as well. And yeah, take advantage of the extra 10 minutes and go vote.
Exactly.
Even as a Canadian, this is an important election for us.